I want to share with you guys. This is important. How you can know this is pump and dump, and try to know how many times they are pumping. You know they pump, usually they pump 3 waves, 1, 2, 3. But this one just got me. That's a huge loss. Every trader complained about this. And some trader, I saw that in the chat room, reported to the SEC. But anyway, let's get it started. Understanding pump and dump. What is pump and dump? Pump and dump, abbreviation P&D, okay, is a stock that represents an often worthless company that is being promoted as being worth a lot more than its value, its real value. It is often paid or uncompensated promotions mandated in some cases by a third party wishing to unload their shares for profit in spite of other gullible traders. Who aren't experienced with these type of events. Paid promotions are the most cases mandated by an unknown third party in possession of a large number of shares for a worthless company, obtained at a discounted price in a pyramid scheme type of site. The third party hires promoters to advertise the stock, and it drives its price up for a certain duration of time. It is one of the most predictable patterns in penny stocks that will make a lot of money. This is often announced weeks in advance before the main course of the promotion starts, just to get people enticed. Promoters, number 1. The smartest man in the room. They have obtained a large number of shares for a given company at a highly discounted price, and is usually responsible for bringing the company public through a reverse merger or S1 registration. This entity provides the base capital for the promotion, and its identity is concealed by multiple corporations, usually has no interest in the company or the product. Number 2, the quarterback. This promoter has the responsibility of building a team of promoters and pay them in cash to perform the promotion. They are directly paid by the smartest man in the room in either cash or free trading stock by knowing which promoter are successful. They make some easy money. They are legally liable as they are the companies that appear as compensating the promotion in the legal disclaimers. Number 3, private placement subscribers. They purchase free trading stock at a discount in order to trade during the public opening. Private placement subscribers usually know about the promotion in advance through a verbal agreement with the smartest man in the room. Number 4, the A-lister. These so-called the grave diggers get paid the most to ensure that their subscribers hold stock for the long term as an investment. Their promotions usually start later than all other promoters. Number 5, the B-lister. B-listers may offer their subscribers a better chance to do well while trading this stock. Number 6, the C-lister. C-lister promoters are the smallest promoters in the group. They receive modest cash compensation per promotion. They often fly under the radar and have less respect for SEC laws. They must usually scavenge for deals with the QB promoters, but they can make up to $25,000 a month. That's not bad, right? Number 7, promotion insiders. This is an entity with first-hand knowledge of how and when the promotion will take place. It might include individuals or companies that know about the promotion deals. They are often the ones to jump the gun and start buying shares before the start of the promo. In anticipation of the move, promotion insiders are usually the ones selling on the day that the promotion begins. They are often responsible for killing promotions by engaging in this type of behavior. Number 8, pre-promo buyers. They are speculators on upcoming promotions who buy shares of the company preemptively in order to benefit early from the price spike. They base themselves on recent trading. Sorry for the typo. I didn't recheck. They base themselves on recent trading volume and the price swings to determine which stocks are worth playing, but take a lot of speculative risks. Number 9, traders with sheep-like followers. These traders may play a stock before, during, or after the promotion takes place. They have profitable track records that novice or inexperienced traders follow blindly by simply following their trades. This provides the traders with background support from their followers performing the same trades. They usually have an advance over other traders because of their following base. Number 10, newsletters. Suckers. Newsletter suckers who trade the promoted stock. They buy a promotion based on the recommendation of a promoted stock. This is usually the category in which penny stock traders with knowledge of a P&D fall into, as well as traders who don't necessarily realize that it's a promotion. They will stay in trade for a very short period of time and exit their positions within 48 to 72 hours. Number 11, newsletter suckers who trade the promoted stock and believe long-term. These type of traders are at the bottom of the pyramid and buy the stock based on the recommendations of a newsletter, usually put forth by a list promoters, mailing list, subscribers based on subscribers list, mailing lists are the foundation of promotion. Finding promoter lists, hot stock tips, pump tracking. These websites come and go, but can provide useful insight about the promotion. Subscribing many promoters send promotions through emails, subscription lists. To be successful in tracking these promotions, usually mean subscribing to a fair amount of a mailing list. Price action. Volume and patterns. P&D follow a very specific pattern that repeats over time. It is easily recognized when taking a look at the chart. A promotion usually focused on a stock that normally has very little to no trading volume over the past few months, keeping in mind that promotions aren't usually run twice for the same stock in the short term. The final stage of the promotion is the dump, when everyone except the long-term holders realize that the company is really worthless and the price drops back to its original price point within a matter of days. Pump and dump are highly predictable patterns that repeat over time. While the exact price action always varies from stock to stock, the daily chart are often very similar, sometimes to the point of a carbon copy from one pump and dump to the next. It is an art and can be risky. It takes practice and experience to achieve profitable results. In buying a pump and dump, knowing the stock price will eventually collapse. The key to take long position in these type of promoted stocks is to know about the promotion early and getting in one the very first day when the price is near its multi-month average. I must repeat, taking a long position late in the pump is risky. I must repeat, taking a long position late in the pump is risky. Don't take the long position when pump is too high. Remember that. You are losing money when the pumping price is too high. Profiting short. This is where most penny stock traders who follow this strategy make their money. Unlike taking a long position, a short position on pump and dump is an assured gain, provided you obtain shares to short and have enough patience to hold through the dumping process. Finding shares to short is difficult. Be aware. Be aware. Pump and dump are very predictable patterns and can lead to very profitable trades. But only understanding how they work and, more importantly, the risk associated with it. You must also understand that these promotions do not always follow the rules, and the companies can be subjected to SEC halts, which suspends trading until the companies provides the necessary information to continue the trading. This is very dangerous for long positions, as post-halt price action can mean a 50 to 75% drop. Bottom line, don't trade pump and dump until you have complete familiar with it. Summary: pump and dump are the result of paid promotions for shady, worthless companies. Pump and dump rely on promoters to pump the stock. Pump and dump offer very predictable, repeatable patterns. Taking pump and dump long position must be done early in the pump. Otherwise, it's very risky and can lead to potential losses. Beware of pump and dumps, as they are often OTCBB stocks and exist within a different set of rules that must be understood. Practice after learned a lot before do pump and dump patterns. Promoters structure is quite complex, and there are multiple levels of penny stocks promoters. Not all promoters are successful. Not all promoters are successful. Some fail from the start. Most promoters do not lead successful pump and dumps. Search for hot stock picks on your search engine and sign up to newsletter using a dedicated email account for pumps. That is all for pump and dump. So be careful, don't trace the pump at the top. You will be dumped and lose money. Please click the like button, please.